Another S&P 500 rally in the stock market in your pension under Trump. Let's have a look, shall we? And I'll do a webinar on this later. Don't forget to like and follow for more. So where are we in the S&P already since January 2023? Up 53%. Okay, now, the issue with the rally, and looks like we are going to continue a bit higher for the moment, is we are very overbought on, sorry, let me do the S&P, not the ESG, the S&P index as a whole. We are very overbought. So we've got this, as I said, the 53% move since January 2023, well, 52%-ish, okay? And whilst you could get another 42% year, were it to continue in sort of the same angle of inclination, if you look at that angle and drop it down a bit more, project it forward from current levels, you're closer to a 33, okay? You could get that going forward. The problem with that scenario is that if you look at this, it's a bit overbought like it was there. Now, it doesn't mean we're necessarily going to get a down year. You don't pre-anticipate it. But given by how much it's already rising the markets, also it looks like all sectors are positive at the moment, immediately following the election. It's not as if some are seen to be punished, but consumer discretionary, clearly market confidence goes up. For some reason, they think tariffs won't bite as much as he perhaps said, because his speech was conciliatory. We'll see. I've done a separate video on Tesla, but overall, it's a bit overbought, but seems bullish and positive given market sentiment so far. So I continue being in it, and I continue holding my S&P, which I've held since then, and my 3 times leverage S&P, which I have in my son's junior ISA. So no change there either. But it does look like we're going to have a bit of a tailwind in the near term at least. Do like and follow for more, and I'll continue doing more of these videos as we go forward. Thank you.